Hello everyone. In the last video, I said that we were going to wrap it up with the next video, but there's one more thing we want to talk about, and that's taxes. Taxes are the main reason that we are here because commercial real estate allows you to defer a large amount of your tax liability into the future by using non-cash expenses to reduce your taxable income. Now, that was a lot, but I'll walk you through kind of how this works so that you have a rough understanding. But the very first piece of advice I have is get an accountant with real estate experience. That's going to save you a ton of time and a ton of headaches because some accountants that don't have real estate experience, they can get you 60% of the way there. But the guys that really know what they're doing, they're going to be able to help you maximize your tax strategy to achieve your financial goals. So getting a good accountant is incredibly important. The main piece of the puzzle is known as depreciation and amortization. These are non-cash expenses that you are allowed to take to reduce the taxable income that comes off of your property. Now, the general idea with depreciation is a structure can only actually survive over a certain amount of time. So the value gets reduced by the uptake or the upkeep costs. And you are allowed to take those expenses over 39 years, depending on asset class, it changes, et cetera. So you're able to reduce your taxable income by that expense amount. And then amortization is how much you are able to reduce your taxable income based off of the cost of borrowing on your mortgage. So both of those things allow you to reduce your taxable income. Now, for depreciation, there's something that's known as a segregation study. So a segregation study is something that you pay for. You bring in an expert and they go through your property and they cut your property up into every single little piece, every faucet, every toilet, every boiler, every HVAC unit, and they give it a useful life so that you can accelerate your depreciation and take a larger expense in the short run, reducing your taxable income even further. So those are great. I think they're worth it. They cost several $1,000s, but depending on what your goals are, they could be extremely beneficial. Now, I will point out that there is a depreciation and amortization recapture at the point at which you sell the property, but the amount that you are able to save and reinvest or reinvest in your property or reinvest into another property is well worth the cost of that when you sell the property. And if you have a really great accountant, they have strategies to help you minimize that recapture amount as well. So I highly recommend you get a really, really good accountant because they are definitely worth the cost. So that's pretty much as I can tell you with taxes because every property is different. Every investment strategy and tax efficiency strategy is different. And I'm not a tax accountant. So you're going to have to reach out to the guys that have all the expertise. But it's good to know the basics. So with that, we're going to go to one final video where we wrap things up, put a nice little bow on it, do a quick summary, and then you've made it through your first real estate investor course. So thanks again for being here, and I'm glad you went on this journey with me. Thanks.